Good evening, this is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Sunday, the 26th of April. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own charts, and not here to issue trading signals. This is a video for paying subscribers at chartingthemarkets.substack.com. For CTM The Bigger Picture at substack.com. This is published on YouTube after a delay of a week. All right, great. Okay, now, obviously, just to put things in perspective here, this rally started at the start of April, basically with talk that peace would be close and that talks were happening, and obviously it's gone up a great deal since. As far as I can tell, everything that was said about talks happening with the Iranians and all this sort of stuff was fake. And the only thing that was actually real was that the US has stood down from the full-scale bullet bombing campaign it was doing, which really they had to, because they seem to have used up about half of their stock of the key missiles that they were using in 4 weeks against a third-rate power, which I have to say is probably given them some pause for thought. But we're not actually any closer to peace, and in terms of the main metric for how this crisis is going, i.e. whether the Strait of Hormuz is open or closed, it's still closed. And it's now been closed for about 2 months. Now, there's a couple of dates coming up. The first one is that on the 1st of May, or thereabouts, Trump is going to have to go to Congress for authorization for this war. Now, I have to say, he's not necessarily one to let the Constitution stand in his way, but nonetheless, it is a constitutional requirement that he needs to get authorization from Congress for the war, or if he doesn't get Congress authorization, he's going to got 30 days to get all his crap out and get the war shut down. Now, obviously, it's not a shooting war at the moment. The US is not still running bombing campaigns against Iran, but obviously it is blockading Iran, which is, generally speaking, an act of war. We've got a ceasefire, which isn't really a ceasefire in the sense that the US is still blockading Iran, and Iran is still shooting at things. So it's not a full-size campaign. We're not seeing bombing campaigns every week in Iran, and every day in Iran pretty much. And we're not seeing Iran attacking its neighbors on the same sort of scale. But nonetheless, the Strait of Hormuz is closed. And the main issue here is the supply shock caused by the Strait of Hormuz being closed. Now, the other date that's coming up is estimated that by 10th of May, things like the reserves being drawn down internationally and so on will have expired, and the full oil shock will begin. There or thereabouts, and obviously that's only an estimate. But even if the Strait of Hormuz was to open tomorrow, well, I was mentioning in a post last week that the last tanker to arrive that had gone through the Strait of Hormuz before the war began arrived on April the 20th, 7 weeks later. That obviously, the point I would make is that when traffic starts from the Strait of Hormuz, it's not going to arrive immediately. So we are looking at some sort of an oil shock coming up. And given that that is the case, there's no real reason why equities are up here. Now, I don't think this move is finished, and I'd like to see it go higher, but I've got to say, it's running on fumes. And in the event that we see some really bad news coming, or there's just a moment of clarity that the market has, we might see a fairly substantial drop. We shall see. All right, in the short term, we've got no negative divergence on ES here. We've got a decent looking rising support trend line, which would be improved if ES would pull back a bit and actually hit it. But I'll talk more about this on the main patterns on the RTH charts. But we have a nice looking uptrend, but it's not really formed itself into a pattern yet. NQ the same, except that we've not really seen even the back and forth that we've seen on the others. It's been straight up. This is particularly odd, as because of course one of the things that has been disrupted on the Strait of Hormuz is of course helium, a necessary component for the manufacture of semiconductors. Obviously, that's going to have an impact. RTY has been pulling back a bit. Looks like a bull flag that's breaking up. YM looks like a bull flag forming. DAX looks like a bull flag forming. ESTX looks like a bull flag forming, and Nikkei. And I have to say, Nikkei, of course, the 80% of the oil that goes to the Strait of Hormuz goes to the Middle East. Sorry, it goes to the Far East. So Japan is on the cutting edge. I've got a friend who's doing business in the Philippines, and apparently there's major rationing going on there now. It's hitting the Far East first, but make no mistake, within a fairly short time, it's going to start reaching everywhere else as well. All right, great. Let's have a look at the bigger picture charts. Okay. Now, looking at SPX, do we have a decent looking pattern here? Not yet, but I'm thinking if we can use this as a baseline, if it goes up directly from here, or if it comes down a little first, then we will see how this goes. But I'm thinking if we can have another leg higher, then we can start forming some decent patterns. Ideally, we'd see a little more downside first, but we will take what we get. Now, in terms of where I'm wondering about it going to, well, it's pretty obvious where I'm seeing the resistance here, and I'm seeing that up here in about the 72.50 area. I'm thinking we might reach that area. And I'm encouraged by the fact that we've got as far as it has. I would say it's looking a little toppy here. In terms of the daily charts, we've got a possible weak RSI 14 sell signal brewing, possible weak RSI 5 sell signal brewing. But if we go a bit higher, these two turn into full-size signals. We did make it back to the 70 level on the RSI 5, which is something I was talking about as desirable. We only made it back to like 71, I think, but close enough. This can give us full-size sell signals, but I just need a bit more of a high here and some more upside to give us those sell signals brewing. On terms of the hourly charts, not a lot to see on SPX here. In terms of, I'm going to be doing more work tomorrow, and I'll have more on Wednesday, looking at possible revisions for the patterns from the April low, which is the one I'm looking at here, and I'll see if I can work a couple of trend lines. But I'm mainly watching this one in the 72.50 at the area and wondering if we could reach that. And honestly, I think it's stupid this has come up this far, but given that it has got this far, I'm thinking it might be able to get a bit further. And I would like also to see Dia retest the height, which it hasn't done yet. Okay, not a lot to see on the 15-minute either. On the Qs, we're getting a bit of positive divergence here, but we haven't really seen much of a pullback here. So it's not of the same kind of quality, but we've got a possible weak RSI 5 sell signal brewing there now too. We've got a weak RSI 14 sell signal fixed and a full-size one brewing. I will be, again, we're working with trend lines here for a pattern from the April low. I just need to tomorrow I'm just going to take some blank daily charts on all of these and to start, over a 2-year time frame and start putting trend lines down to see what I can work out. And chances are I will, well, if there's something to be had there, I will find it. Okay, looking at the keys on the 15-minute, we really have been going up very steeply here. This has been the most persistent to the upside. We will see how that goes, but I am thinking this is overdue at least a little bit of a retracement. All right, Dia, we made it back to the 70 level as well, a bit below. We've got a weak RSI 5 sell signal fixed, and I'd like to see this retest the high. But also, if we are going to see a bit more upside this week, and given that we're really, the possible head and shoulders that was forming here has pretty much disappeared, I'd really like to see a retest of this high here at 503.37, and I think there's a pretty good chance we're going to see that. All right, looking at the hourly chart, we've got an RSI 14 sell signal fixed. We have on the 15-minute chart, I've got a decent looking channel here actually. I don't know how long it's going to last, but if we were to go up directly from here, then that would be a very nice looking pattern, which would be good because it would be the first decent pattern we had on these so far. All right, let's have a look at the bigger picture chart on the IWM. Okay, IWM, we've almost made it back to the 70 level, but if we see a new high from here, I'll be looking at that as a full size RSI 5 sell signal brewing, and possibly we might get an RSI 14 one as well. Still got a decent looking level top here, and we've already retested the high, so I don't have expectations that it's going. We don't need this to go much higher, but it may go up a bit higher as well. On the hourly chart, we've got an RSI 14 sell signal fixed. On the 15-minute chart, I looked carefully here, and in terms of these patterns for the move up from the late March low, I've just not got a lot here at the moment. If we can go higher on all of these, really, then I've got a much better chance of getting some decent patterns. Generally speaking, in not necessarily as heavy news environments as the one we're currently in, a lack of decent patterns like the one we are generally looking at here, apart from on Dow, would generally mean an expectation that it would go higher. So that's my lean as we stand here. In terms of DAX, I'm leaning towards seeing a retest of the high. Looks like short-term bull flags, and Nikkei has already retested the high, and we've actually already got an RSI 5 sell signal fixed, a full-size one. We've got a beautiful double top here. Don't know how much further this is going to go up, but it doesn't need to go up any further. The setup is already a beautiful one. All right, great. Let's have a look at DX. Okay, DX, this is drifting up just as oil is drifting up. The markets have gone up, but all the declines we had on oil pretty much have been given back. On DX, we're giving up much of this as well. And that could still, we've still got an open double top target down in the 96.76 to 96.99 range. It could still make that. This could be a bear flag forming. That it may be that we're setting up to go back and retest this high. That rather depends on what does happen in the news. In terms of the euro, open IHS target in the 1.875 area. It did get fairly close to that, but I'm still thinking it might reach it. GBP USD looks like a flag heading a bit higher. USD JPY. This again looks like a flag setting up a retest of this high. Could be a head and shoulders forming, but yeah, it could still be. And it should be a pretty nice one if it just fell directly from here, but I'm not really expecting that. USD CAD, not seeing a lot. Australian dollar, we've got a big potential double top here, and NZ USD, possible IHS forming, but nothing really to get that excited about in terms of the quality of the pattern. All right, let's have a look at that on the bigger picture charts and US dollar. US dollar, we've got the RSI 5 buy signal that we had on has now reached the possible near miss target. We're still on a weak RSI 14 sell signal. If we are going to see some more downside in the short term, now wouldn't be a bad time to do that. Bigger picture, I'm still wondering whether we're going to see a break up from, hang on, bear with me a sec. All right, this double bottom, the last one obviously broke up and rejected back to the lows. We could do the same here. I have to say the fundamentals for the dollar with this war and frankly generally do not look great. But I'm still optimistic. We still have a very nice looking bull flag. I mean, you can see on the weekly chart here, hang on, bear with me a sec. This is really a beauty. It's nice. So I'm still thinking this has a shot, and if the best shot for it is if we do have a serious crisis in the Strait of Hormuz, although obviously that will not have a good impact on anything else. In terms of the euro, we've got a matching bear flag here, and it's nice. In terms of GBP USD, apologies, I'm wild about these thinking moments, but we've got a beautiful bear flag that too. All of this could potentially be very bullish for the US dollar if we do have a serious crisis in Hormuz, because the dollar has been going up on the crisis, not down. The dollar is still a flight to safety. Bonds, not so much, but the dollar is. In terms of EURUSD, double top has broken down. We've seen a big rally. We could be rejecting back up to the high, of course. We will see. GBP USD on the daily chart, we have no current divergence. We've got a possible double top here, but it hasn't broken down yet, and the overall rising wedge from the 2022 low hasn't broken up yet either. In terms of USD JPY, I'm still wondering about a retest of the high at 162, and we're pretty close to that. And I'm thinking we're likely to see that in the next few weeks. That would involve the US dollar, of course, going up. USD CAD, we're still in the long consolidation from basically in a range from 2015, and I'm thinking we might see a retest of this high here in the 1.48 area. On Australian dollar, we've got a short-term double top formed, and that would see there is a very obvious target at a back test of this high here in the 0.64 area, and that wouldn't be a bad match for that. Not a lot to see on NZUSD at the moment. So mainly, hang on, wait a second. Sorry, it's slightly irritating. So we've made bigger picture though. We've got a triangle that's been forming over the last 6 years, which is trying to break up. If the dollar goes up a lot, obviously this would break down, but otherwise, it's still got the option of breaking up. It might just be rejecting. It might be rejecting them at the moment. Okay, let's have a look at bonds. All right, ZB. ZB, we've been holding resistance at the monthly pivot, which is only the monthly pivot until the close on Thursday, of course. We've got FOMC this week. We've not seen a lot of action over the last few days. This could be, well, I suspect it's a bearish consolidation. If we start seeing the Iran war hot up in the next few days, and that doesn't mean necessarily that we see an uptick in violence or bombing. It just means that we are not making a deal and the Strait of Hormuz is still closed. That's not going to be good for anybody, but it's unlikely to be good for bonds. The crisis so far has involved bonds going down when it hots up, and when we've not been making much progress to the upside. And the buy signals, which I was looking for to deliver more upside, have pretty much all made their targets or the possible near-miss targets. In terms of ZN, this looks like a bear flag which is breaking down. ZB, frankly, this could be a bear flag which is close to breaking down as well. In terms of upside, we've not delivered anything over the monthly pivot. We tested it twice, 3 times, and rejected every time. Obviously, there's only the we'll have a new monthly pivot soon, but given the very, very narrow range we've played in April, I'd be guessing that would be in about the 114.12 area. It's going to be a pretty narrow range and not too far away from the current one. All right, let's have a look at those on the bigger picture charts as well. All right, TYX. The RSI 5 sell signal there, which was bullish for bonds, has made the possible near-miss target and is working its way back up to the highs at the moment. On TNX, we had a sell signal as well. And that has made the full target on the RSI 5, not taking the RSI 14 one as seriously. They're not as reliable. The RSI 5 was the main one I was watching at, and that reached the full target. In terms of TLT, we've got on the daily chart, hang on, wait a second. That's the hourly chart. That's the daily chart. Yeah, there we reached the full target as well. So those were the signals that I was thinking leaned bullish on bonds, and they pretty much all delivered. Bigger picture. We have on the monthly chart, we've got the same IHS forming, and it looks pretty nice, and we're holding the monthly middle band as support. This is a decent looking setup, and the obvious next target would be a move up to this trend line here. We've got a pretty decent looking rising wedge here. And that's the obvious next target. So that would be up at a new high for the decade, but though not by much. And that would be in about the 51.60 65 area. All right, looking at TNX. TNX, we have the same possible inverse head and shoulders forming, and it's looking pretty good. We will see how that goes from here. Do we have the same triangle? No, that's the triangle on the TYX isn't a triangle, it's a rising wedge. This is a triangle, and it's quite a nice one. Next obvious target would be up in about the 46.3 or 4 area, and that's where I'm expecting it to go next. Bigger picture, this is bearish for bonds and bullish for bond yields. In terms of FVX, we have another triangle. I'm looking for a target there at about the 42.23 area, and on TLT, hang on, we have another triangle, and again, this is likely to be a bearish triangle. Now we could go up a bit first, but I have to say, looking at TNX and looking at the other bond yields charts, I'm a little skeptical about that happening, but sooner or later, this will likely deliver a sizable move down in bonds, and all of the charts are agreed on that. Doesn't have to happen, but there's a strong lean. All right, let's have a look at oil. Now, looking at Brent crude, this was the big decline on the Friday when Trump was saying, a deal was almost signed and so on. Obviously, that was BS, and we're now back almost at the highs here. We've got a 6-minute sell signal fix. So far, it's delivering nothing. Retest of the high on this contract since the war started would be at 105, and we're up in about the 102 area. on Friday. Looking at CL, we're a little further from the high, but it's getting back up to the wartime highs in terms of the CL June contract. This was the move down on that Friday, and obviously that has been given back and more. And that's because obviously there is no peace and the Strait of Hormuz is still closed. HO, a little further away from the highs, but working its way back up. This was that Friday decline. Again, it's taking back all of that and another 50% more. In terms of RBOB, that's already back at the highs for the conflict so far. We've got a couple of sell signals here, but at the moment we're a little light on the actual good news. In terms of NG, we had a little bear flag forming. We've got a potential level top here. We've gone a little lower, and in terms of the wedge here, we've come back and we've back tested the broken wedge resistance. I'm thinking we might well see a rally here. We've got a 60-minute buy signal. What we're missing at the moment is some buyers for NG who have been a little thin on the ground. So, but we may find they're coming in next week. All right, let's have a look at Brent. Brent, we are working our way back up to these highs on the daily chart. I'm still leaning towards, as long as the crisis stays in play, we've still got a flag target up at a retest of the 2022 high at 134.91. And if the Strait of Hormuz stays closed, this is likely to be biting in the middle to the end of May. At which point I'd be looking for sizable increases, because as soon as we run out of the reserves, if the Strait of Hormuz stays closed, then at that stage we've got a price issue, and the price will go up until we have a balance between price will go up and destroy demand until there is a new balance between supply and demand at a price which has then been established. Which is just, and that price would have destroyed enough demand to balance out the reduced supply with the demand. So that could involve oil going up an awful lot, in which case we could be seeing new all-time highs across the board. In terms of, just to put it in perspective, if you took this 147.5 price from 2008 and you adjusted it for inflation, that would now be in about the $230 area. I'm thinking we could be looking at that within a couple of months. Be aware of that. Another thing which is really interesting is actually that the impact on the oil price of the move up in terms of the oil share valuations, in terms of the move up on oil, hasn't actually really been that much. But what has been going up is some of the EV manufacturers. That actually is really interesting. So I think what the problem, and this is one problem with people rebuilding things and building new refineries, as I know Trump's trying to get people to build in the US. And that's the thing is, if you're looking at something which has a 30-year life cycle, we're already looking at a situation where the largest source of energy in the world is now renewables. It's up at 34% and it's now overtaken coal. How long are we going to be having large amounts of fossil fuels in the system? 30 years? I wonder. I'm somewhat doubtful about that. This is one reason why people have been reluctant to invest in new oil capacity, just in the expectation that actually demand may be falling off considerably as the renewables revolution continues outside the US and likely continues inside the US after Trump's out of office. We shall see. All right. In the meantime, Brent, open target at the open flag target at a retest of the 2022 high at 134.91. WTIC, we've got an open target at a retest of the 2022 high in the 126.42 area, and we've also got an old double bottom from 5 years ago, which may then make it the extension target at a retest of the 2008 high at 147.27. Heating oil has already made the flag target and a new all-time high over 447. Doesn't mean it can't go higher. Gas oil was slow out of the gate, but you can see in the last couple of months, over the last 2 months, this month we've been making significant further highs. That's got a target at an all-time high at 412. which was the all-time high made in 2022. All right, looking at natural gas, we've got a nice looking falling wedge here. I'm really liking a move up, a rally in there, and we've got quite a nice pattern for it if it can be delivered. On the bigger picture, though, I've got this as a bear flag, likely megaphone breaking down with a target at a retest of this low here in the 1.886 area. Now, well, that's going to be interesting to see if it can make it, but at the moment, I'm not really seeing anything that's suggesting that it can't, and of course it's not really been affected by the straightforward moves as yet. No current divergence. All right, great. Let's have a look at precious metals. Okay, looking at GC, we've spent we've spent the last 3 weeks just basically trading sideways. We've got a possible level top here. I am wondering about a bit of downside here. We haven't got the negative divergence that we did have. But one thing I did notice that when the prices was hotting up in oil before, precious metals were going down. Now, I'm not convinced that's going to happen next time. I think it may take its rightful place back as a flight to safety trade. And I think on the bigger picture, I'm leaning quite bullish on precious metals, but I am thinking we may see some more downside first. Looking at SI, we've got a 6-minute buy signal fixed. Wondering if this is a flag that's broken down. And whether that buy signal might get us back into let's say a high retest, setting up a little top to go lower, but we shall see. Looking at palladium, this kind of looks like a bear flag. Platinum looks like a bear flag that's broken down. I am concerned about seeing more downside before we see more upside on precious metals. On HG, HG has been trading sideways for a few days, and this I'm leaning towards this being a bullish consolidation before we go up and retest the end of January high. And I think that's probably where this is headed. But we shall see how that goes. But I'm quite liking that. There is an obvious retest target there. All right, let's have a look at that on the bigger picture charts. Okay. Looking at GC, we've got an RSI5 sell signal, which has now reached the possible near miss target. And also, if you look at the RSI2, I don't mark these in, but these, when you see a clear buy signal here, it's generally worth taking note of in the short term. This is leaning bullish in the short term on gold. Now, I never mark these in. But if you see a decent quality buy signal there, which that is a decent quality one, what are the ones we got on this chart? We've got one here, made target beautifully. We've got one here, made target beautifully. We've got one here, made target beautifully. In terms of, these are only short-term sell signals, and that's the reason I don't mark them in. But nonetheless, they're worth watching. Looking at the sell signals on the RSI2, this one here, made target. This one here, made target. This one here made target. This one actually made a higher high after it initially fixed, but nonetheless it made target. And this, I don't think that was quite a signal. So not as many of the sell signals, but nonetheless they were pretty good at making target too. I'm leaning towards seeing some upside in the short term on gold. On the bigger picture, this is a perfect bull flag channel. I'm thinking we may see a bit more downside, but it wouldn't surprise me to see this break up and head back up to the highs. Really, in terms of this crisis, I'd be expecting gold on the bigger picture to act as a flight to safety destination. Precious metals should be a good place to go and find refuge, and I'm thinking that may well be what we see. In terms of silver, this looks like a bull flag, which has also broken up. We're holding the daily middle band at the moment, more or less, and we could head straight up from there. We've got an RSI5 sell signal fix that didn't quite reach the possible near miss target, but pretty much all the others did. In terms of platinum, no. This has reached possible near miss target. Sorry, I've mislabeled that. I didn't put that in. I've got it in as fixed, but it's reached possible near miss target already. We've got an RSI 14 sell signal fixed, an older one which hasn't made the target yet. But here, I'm going to mark that in as reaching it. So we've only really got one that hasn't reached the possible near miss target yet. Gold has reached the possible near miss target. This one has reached the possible near miss target. And the two sell signals we had on GDX have both, I think, reached their possible near miss targets, but we'll get to those in a minute. All right. Good. All right, sorry, just want to adjust that while we're watching it. Okay, now looking at palladium, I don't think we have anything particularly solid on that. No sell signal at the high. But we're down at the 30 level on the RSI 5. This would be a good time to find a bounce if it's going to. In terms of GDX, we had a daily sell signal, it's made target, and an RSI 5, a weak RSI 5 buy signal is fixed. And on GDXJ, we had an RSI 5 sell signal, and that's made target too. So a week ago, a week and a half ago, we had an awful lot of sell signals. We don't anymore. And the only one that hasn't made the possible near miss target is silver. All right, looking at copper. Copper on the daily chart, RSI 14 sell signal has pretty much signed off. That reached the possible near miss target and we saw a big rally. We've got an RSI 5 sell signal, which is now fixed. So I'd be leaning towards seeing a bit of downside here. But bigger picture, I'm wondering about a retest of this high here at 6.583. And I think we may well see that in the next few weeks. Okay, let's have a look at the other commodities. So KC still looks like a bear flag forming. Sugar, I'm wondering about a possible larger rally here. Not seeing a really nice looking pattern form, but we could see a nice IHS right shoulder form in this area here. On CC, this is a perfect bear flag channel. My lean is it's going to break down and retest this low. Looking at CT, we've got a little bigger picture double bottom that's broken up. Still waiting for wheat, corn, and soy to join that party. But we're seeing a little bit of a pullback here, probably just a bull flag forming. Lumber, we're still pretty close to the lows. I've rolled this into July, and it looks somewhat different here. We've already retested this low here, which we hadn't on the other. I'm thinking bigger picture, we may just resume the downtrend, but we do in the short term have a double bottom here, which could deliver. We've got on wheat, we're trying to break over the monthly pivot. We've already made the double bottom target, IHS target rather. I would love to see this start to make tracks to the upside, and I'm thinking it may start doing that. So we've got some bigger picture patterns which I'm going through again. Corn, this looks like it might be a bear flag, but I'd like to see this break higher as well. And soy, I'm thinking we're likely forming an IHS right shoulder here, and I'm thinking this may have big upside as well. All of these are being already significantly affected by the shortage of fertilizers coming through the Strait of Hormuz. And this has already affected the next planting season. I'm thinking we may see some real fireworks on the upside from these. On ZL, pretty close to the highs, and I'm expecting that would likely head up with soy. Live cattle looks like a bull flag forming, leaning towards this, resuming the uptrend afterwards. And HE is finding some support down here, which is good because we retraced 61.8% of the prior trend, and I would like to see this be a bull flag and start making some tracks to the upside soon. Okay, let's have a look at those on the bigger picture charts. And on coffee, we're seeing some consolidation here. I'm leaning towards this being a bear flag, setting up a retest of the low. I don't think this IHS is going to make target, and actually, it's been invalidated now anyway. We broke the right shoulder low at 281.60. So I'm thinking this is a bear flag, and in due course, I'm expecting to see a retest of this low here at 275.33. And we could see a move down to these double top targets, which I've got in the 260 to 267 area. All right, looking at sugar, obviously on the bigger picture, we've got an overall target down in the 9 area, which is always something in my mind. Looking at the shorter term, we've got a buy signal, we've got a pretty decent looking falling wedge, and I think we might be falling a double bottom within this falling wedge. We shall see how that goes, but we've got an RSI 5 buy signal fixed. It's almost reached the possible near miss target. I'm thinking we could see some upside here, but I'm leaning towards seeing a full retest of this low here in the 1334 area first. All right, looking at cocoa, obviously we had a wild move up at the start of 24, through much of 24, and we've now given most of that back. We've been seeing a bit of a rally. No current divergence. We got buy signals on RSI 14 and RSI 5 at the lows. We've still got a weak RSI 14 buy signal fixed here, which could deliver a bit more upside, but this looks like a bear flag forming, setting up a retest of this low here at 28.46. Looking at cotton, we had a double bottom broken up with the target in the 88.64 to 89.13 area. We are consolidating a bit there, but I'm not seeing any reason to think that we aren't going to make that target. Looking at the daily chart, no current divergence, but when we retest this high at 81.79, we will get some negative divergence on the daily charts, setting up potential daily sell signals. Lumber, this is almost, well, it's a 3.5-year flag now. From the start of 2023, it's a nice flag, and I'm expecting it to deliver in due course. So when will that happen? Well, it's taking longer than I expected already. But we've got a double top, which is broken down with a target, basically at the bull flag target, which is a retest of this low here at 352.50. Okay, looking at wheat, we've got a lovely double bottom here. It is thinking about breaking up, and if it breaks up, that would have a target in the 739.742 area. Looking at wheat on the daily, no current divergence, liking a move higher if it can break higher. Looking at corn, we've got a double bottom here. We are not close to breaking up from it, but if we see a sustained break over 504.50, that would look for a target in the 624 to 640.25 area. So liking that on the upside. And on soybeans, this looks like an inverted head and shoulders forming, as and when we see a sustained break up over 1235, would look for a target in the 1560 area. So we will see how that goes. All right, let's have a look at crypto. So bear with me a second. Alrighty then. Okay, looking at Bitcoin. Sorry, bear with me a moment. All right, okay, caught up all my Bitcoin charts. We have gone a little higher here. Are we still likely to be forming a bear flag? Yes. Could we break down at any time? Yes. But at the moment, no hourly sell signals. We've still got an RSI 5 sell signal fixed on the daily, and I'm still expecting this to play out in due course. In terms of the flag here, we are not going up really, but we're currently not going down either. We might just be retesting the 79.5k to set up a nested double top to take this lower. I hope so. But at the moment, it's still being buoyed up a bit by the optimism on equities, which has been very optimistic. All right, looking at Solana. Solana, we've been seeing a little bit more upside here. Are we overall? This looks like bearish consolidation. This is actually a perfectly nice valid bear flag that's already broken down with the target to retest the lows. Looks like we might be forming a larger triangle here. We've seen a little upside here, but at the moment we're not in any danger of making the IHS target at 97.66. I'm skeptical about that making target. Hasn't failed the IHS though. We'd need to get below 81.31 for that, and it hasn't managed that yet. All right, looking at Ethereum. Ethereum, we're seeing possible retest of the high coming. We haven't got a decent looking flag here, but it still looks very much like a bearish consolidation, setting up a retest of the low. As and when we retest the lows, which I think is likely, the low to be retested would be 61.60.1k on Bitcoin, would be at 67.65 on Solana, and would be at 1746.93 on Ethereum. All right, great. In that case, I think that's a wrap. Everyone take care, and I'll catch you guys again on Wednesday. Cheers.